Are you self-employed and would like to know if you qualify for a home loan? Let's hear what Jeff Williams from Nations Lending has to say about the new guidelines for self-employed individuals.
So, some good news on the changing topics in the mortgage industry, right? So, self-employed folks can always be somewhat of a challenge depending on how they do their tax returns, right? Um, the good news is ever since COVID started, March of 2020, the documentation has been much worse. So in addition to getting the tax returns, every self-employed person, even if this is a good example, let's say it's February, so it's early in the year, and we already have your 2021 tax returns. What's been required for the last 2 years is we still got to get a year-to-date P&L from you. And at first they started out, along with the P&L, we got to get your last 2 months bank statements, from your business to show that it supports what the P&L says, so people don't fib that they're really making income and they're not. Then they changed it from 2 months to 3 months. So in addition to all of the other stuff that a self-employed person does, we're having to get updated P&L, 2 or 3 months bank statements. But they finally just removed those conditions. So the P&L is
Wow.
now, if it gets later in the year, you're still going to get P&L, but we don't have to get the bank statements to back it up. So documentation just got easier for self-employed people. So that's a positive. Some of the COVID overlays are going away.
That's great. So for refinancing as well, does that apply?
Yeah, self-employed, yes, ma'am.
Wow, awesome. Well, there you go. Everybody that's self-employed like myself, I'm a real estate agent and you're a loan. What is your title, Jeff?
Well, I'm a branch manager, but I'm a loan officer. I'm a senior loan officer.
Yeah, I didn't want to say loan officer because I know you're more, but
that's the other thing though. So as we all know, self-employed people like to get creative on their taxes. And don't always show their income, or they show the income, but their expenses match their income. So it looks like they made no money. So we actually have programs. I'm actually closing one Monday on a new construction deal, self-employed buyer, tax returns, don't qualify them to make a car payment, much less house payment. But we can do bank statements. I can get your bank statements, and if your cash flow is there, you're approved. It's a little over the conventional rates that you're advertised, but it's still a good deal to get you in a house. I got one closing Monday. So that's something else for self-employed people.
That's great. So what about interest rates? Are they going to be the same as if you had a W-2?
It depends on which program you're talking about. If you're talking about traditional self-employed and their income qualifies, yeah, it's the exact same thing as a W-2.
Okay.
If you're looking at the creative side, I just mentioned on the bank statement program, that's called a non-QM, non-qualified mortgage. So yeah, those rates are a little higher.
Okay.
Yeah. So it depends on which one you're talking about. But yeah, a standard self-employed person, they qualify same rates as anyone else.
Gotcha. That's good to know. All right, guys. So if you're self-employed, now you know you can purchase a house. There's just a little bit of more paperwork, maybe.
That's always, but it's less than it was last month.
Exactly, because now you're getting rid of so much stuff. That's great. That's really great. So thank you, Jeff.
Thank you. Have a good day.
You too. I hope this segment has been helpful. If you want more information, just contact myself or Jeff Williams, and I will leave our information below.